The mock paper answer discussion today. I'm Nishant Adhikari. Today we will discuss first I would issue everyone to have a uh, happy new year because you can celebrate once you have done your examination. Therefore, I will wish you a very happy new year and your all the dreams and your exams where you can do as you wish and you can hopefully you will get a very successful result and it will be a fabulous year. Wish you all the best. And with that blessing, we will start our discussion. Right. I think you might have already written the mock exam paper conducted by CA Sri Lanka. Today, I'm not going to take much of your time. We'll straight away move to the mock paper and we will discuss the answers. Right. Okay. I'm moving to the paper. Okay. Right. First, we will start with the uh, MCQ questions. In the examination, you will receive uh, a paper with 3 sections. First section, 10 MCQs. Second section, 4 questions with 10 marks each. It is essay type question. And final section, third section, 2 questions which carries 20 marks each. Right? You have 15-minute reading time and 3 hours writing time. Guys, therefore, this is the last examination under current curriculum. Therefore, there's no don't take take any opportunity to do it in next time. Do it in this time and clear it off. Right. We'll start with the first question. Uh, when you're going to write an examination, they might have given these illustration and description. First, read the requirement. Which of the above statements best explain the reasons why traditional management accounting techniques are considered inadequate in the modern manufacturing environment? Then read, then you can easily pick the answers. That's why when you're writing an examination, you have read the requirement, then read the question. Right, then it is very easy to catch up. Now you need to identify what are the weaknesses of traditional management accounting in modern manufacturing environment. Right, you can see first one, they generate ineffective performance measurement result that could lead to inaccurate decision. Exactly, they will give the inaccurate decision making, inaccurate information. Variance analysis one, because you can't expect a fixed environment. Therefore, constant environment, but environment is time changing. Therefore, it will give a wrong performance measurement. That is correct. It is a one of the weakness in traditional management accounting. The modern manufacturing environment needs better methods of allocating cost based on the cause and effect relationship rather than absorption costing. That's why we are using ABC. Exactly, that answer also correct. Therefore, you have to think about the cause and effect relationship and to avoid the effect on absorption costing. Absorption costing, what will happen? You will allocate the overhead arbitrary, right, without considering resource consumed by each product or service. Therefore, you can use ABC for that purpose. Therefore, answer two also correct. It is a weakness of traditional management accounting. The standard costing system is based on assumptions that are invalid today. It's environment. Yes, we are changing time. Day by day, it is changing. Constant environment you can't assume. Therefore, correct answer. All 3 statements are correct because those 3 statements describe the weaknesses in more traditional management accounting. Therefore, answer should be D, all of 1, 2, and 3. Right, okay. Then we will move to the next question number 2. There are 3 statements given what they asked to do. Which of the above could be cited in favor of the proposal of adopt rolling budgets? Rolling budgets will be applicable when the environment is highly volatile. In a volatile environment, you have to do the rolling budget. You may know about rolling budget. Current year, assume 12 months period, you will prepare the budget. Assume after completion of 1 month, then actual of 1 month, first year, first month, 1 month plus budget of 11 months. You will do the rolling forecast based on reflect the current situation, right? Look at a sales manager of reputed buying and selling company after having analyzed the company's current fixed periodic budgets, the item purchases has proposed to adopt rolling budgets. The budget committee requested him to table a proposal for consideration. Consider following. Monthly demand for the item sold is highly volatile and unpredictable as the company is serving it to a growing market. Exactly. When you're serving to a growing market and demand is highly volatile, you can't adapt a fixed budget, then it should be a rolling budget. Therefore, you have to favor that number one is correct. Number two, a better performance monitoring of employees is possible with rolling budgets as it support realistic and more accurate budget figures. Yes, exactly. Because if fixed budget, it is unrealistic when the conditions are drastically changed. Therefore, have a proper evaluation. Rolling budget reflect the true picture of the current environment. Therefore, that is correct. Number two also correct. Number three, rolling budgets allow increased time for managers to complete their other critical tasks as less time and effort is now required to complete the budgets. That you can't agree because each month you have to predict the future. You have to revise the budget. You have to reforecast it. Right? Rolling budgets are like that. Therefore, it takes a little much time than the normal traditional incremental budgeting. Therefore, number three is wrong. Therefore, number one and two you can take as a criteria for the proposal. Number one and two can be taken. Those are accurate. Therefore, answer for question number two is A, one and two only. Right. Now, next one about balance scorecard. KPIs and the balance scorecard is mentioned. What you need to do. The following are some of the key performance indicators applicable to the banking industry. There are four indicators given. KPIs under the balance scorecard system would be, okay, what can you put into the KPIs? Okay. Yeah. The recording will be uploaded, guys. Don't worry. Now, out of these four, in a KPI, I mean, you will set the targets to evaluate. In the balance scorecard, you will learn four perspective. Can you remember four perspective? Financial perspective, customer perspective, learning and growth perspective, internal business processes perspective will be there. Therefore, evaluation will be done not solely based on financial and non-financial factors will be set. Then you will evaluate the performance and each category you will set the KPIs. Right. Okay. Number one, return on capital employed. Yes, it is a financial indicator we can take to evaluate the performance that you can. Number of customer complaints per thousand customers. That customer perspective you can evaluate uh, whether customer perspective you have improved or not. Third, number of new services made available through e-banking. Learning and innovation. Right? Number of colleagues trained to provide advice to SMEs, training and innovation, right? Therefore, all four can be set as KPIs. Therefore, all one, two, three, and four can be set as key performance indicators, right? KPIs, key performance indicators. That is question number three. Question number four of MCQ. Which of the following is the main argument for the use of residual income as a measure of performance for investment centers as opposed to return on investment? In return on investment, if an investment is below the ROI, yes, you can get the recording. Don't worry. If any project ROI is below the your current ROI, divisional ROI, that particular investment will be rejected. But actually, those projects can generate a positive NPV, positive cash flow. It will help to improve the wealth of the shareholders. Therefore, residual income, you will say, after allocating cost of capital for the capital providers, are there any surplus? If there are any surplus, that will added to the shareholders, right, guys? Therefore, it will be a value creation. Guys, with the limited time, I am explaining some concepts as well. Answer for third question is D. Right. Therefore, question number four. Now we have to see which of the following is main argument for use of residual income. How to calculate residual income? Net profit. Then you will deduct nominal charge for cost of capital. Cost of capital charge will be deducted. RI, residual income, is more equitable way to compare the division of different sizes and ages. No, right? Then it is ROI is better then. RI is an absolute amount, and therefore there is no confusion on choosing denominator gross book value or net book value. That's also wrong, right? See, RI will not cause managers to reject investment that generate a return greater than the cost of capital, but lower than the divisional average ROI. That's the case. Assume if your cost of capital is 10%, after you charge 10%, if it is give additional 2% revenue or net profit, then definitely you will select it even though ROI target is not met, right? Because it's generate positive return over the cost of capital. Therefore, answer should be C for question number 4. Answer should be C. Question number 5, right? We'll see question number 5. A local railway department is planning to construct a new rail. Okay, first we look at what is the requirement. Which of the above would be the most suitable project evaluation approach or approaches for the new railway track project? Now we are going to evaluate railway track project. Then what are the suitable method to evaluate project? There are three uh, options given. First one, calculate the IRR that include cost and benefit to all stakeholders of the project. Now, guys, when we are doing a project like this railway, power plant, because those projects have a great impact on the society. Therefore, generally those projects majorly conducted by government. Therefore, when we are going to evaluate those projects, have you learned about social project evaluation techniques? It's there in syllabus we have learned in you might have discussed. In the social project evaluation technique, not NPV we are taking social net present value, social net present value, or economic net present, we call economic net present value. IRR, we'll take economic IRR, right? Because it has a great impact on the society. Therefore, calculate IRR and include cost and benefit to all stakeholders of the project. The community we have to see as a whole, right? That's number one is correct. Number two, calculate the total cost and benefit generated by the project to the society as a whole. Yes, exactly. Therefore, one and two also correct. Three, calculate the NPV of all the financial cash flow that are expected by the railway department during the lifetime. Then that is only a kind of entity they are evaluating their financial net present value. If it is a social project, then you have to use the social project evaluation not technique. Not you will not evaluate the benefit only received for one particular organization or one particular person. Therefore, third one is wrong. Therefore, correct answer is 1 and 2 only. Answer should be A, because those are social project evaluation technique to be used. Social project evaluation techniques, right? Then we will move to question number 6. Question number 6. The following statements were made with regard to the different pricing strategies, right? You will ask, which of the above statements are true? Which are the above statements are true? There are 4 statements given. Statement hatarක් දීලා තියෙනවා. Out of those 4 statements, which are the correct statement, true statement? First one, price skimming is more appropriate when the product has no substitutes in the market. මොකක්ද ළමයි මේ price skimming කියලා කියන්නේ? The price skimming is you will set a higher price. Assume when Apple launching a product, they will set a higher price. You are targeting a high income earners, right? You want to cover the most of the cost at the early stage of your life cycle, because when they are launching a new phone, they will charge a premium price. Initial stage, if they can recover most of the cost or total cost, then subsequently they can reduce the price when other competitors enter into the market with a similar product, right? That's why initially you charge a premium price and recover the total cost. Thereafter, you can reduce the price and compete in the market. Therefore, that is correct. Price skimming is more appropriate for a product has no substitute. You can charge a premium price, high price. Market penetration pricing is appropriate to reach a greater market share than competitors. Yeah, in market penetration mean you will charge a lower price in order to enter into the market. You have a lower margin or thin margin. Margin එක පොඩ්ඩයි තියෙන්නේ. You wanted to increase the volume. Volume match එකක් තමයි ගහන්නේ. If the volume is higher, even the margin is lower, ultimately you will get a huge benefit, right? Therefore, you can compete. Sometimes you will offer the product price lower than competitors' production cost. Then you can eliminate the competitors from the market as well. That is a pricing policy. If the similar products are already available, you will use the market penetration pricing to attract price sensitive customers, charge a lower price. Therefore, number 2 also correct. Number 3, when there is inelastic demand in the market, the most appropriate strategy would be market penetration pricing. Inelastic demand කියලා කියන්නේ ළමයි when price increases, the percentage of increased price is higher than the percentage reduction in quantity. Under such situation, can we agree with that? No, inelastic demand එකක් තියෙනවා මේ market penetration කියන්නේ price එක අඩු කරනවා. එතකොට automatically your revenue will decline. Your profitability will decline. If the market is inelastic, you have to charge a price, higher price. You can increase the price to increase your turnover and increase your profit. I'll take an example, salt. It has an inelastic demand. Then you can increase the price because they are not price sensitive. It is mandatory, right? Fourth one, price discrimination is the charging different prices at the same product in different stages of its product life cycle. No, that is wrong. Price discrimination is charging different prices in the different market and not in the different stages of product life cycle. Therefore, number 4 wrong. Therefore, correct answers are number 1 and 2 only. 1 and 2 only. Right. 1 and 2 only. Then we can move to question number 7. Guys, don't know whether I am a little bit faster because I need to cover up entire paper within given time, and therefore that's I have a little bit moving fast. But you have to, I think you have already done the paper. You can mark your paper and you can check how much you have got. Question number 7. The following statement were made with regard to the big data of an organization. Big data mean the data has a high volume, high variety, and high velocity. The 3 V's you might have already learned. Which of the above statements are mostly true with regard to the big data? When considering the big data, what are the most relevant or true statement about among the 4 statements? Number 1, big data could be collected only within the organization and not from the external sources. Totally wrong. Big data, unstructured data, you will collect wherever it's available. Sometimes it's in social media platform like Facebook, WhatsApp, I am Facebook, WhatsApp, Instagram, X, or different platforms. You can, even barcode readers also you can collect information, not information, data. Therefore, it is not the internal source. All are external sources, wherever all possible sources you can collect the data. The number 1 is wrong. Big data is huge amount of information. It is not information. Information will get once you process the data. Data, process, then information. Information are structured data. Big data is unstructured. Therefore, it is not information. They were totally wrong. Number 2. Big data also include past data internally stored within an organization. Yes, can be. Internally stored data can be there in the historical data. That can be. There could be a cost involved in converting big data to a useful information for decision making. It has a huge cost. You want big servers and you want new techniques to convert those data into information. Therefore, number 4 also correct. Therefore, correct answer is D. 3 and 4 only. 3 and 4 only. Right. Question number 8. 8th question number. A company has taken a decision to switch from using long-term fixed rate finance to fund its working capital to mainly short-term variable rate financing. Here we should assume only data. Yes, here we assume data because data is unstructured data, big data. Big data will analyze into information, guys. It there in the study pack you can refer what is the meaning of big data. Those are unstructured, right? High volume of data with variety of data included, variety of platform, variety of forms, right? That's why I said the three V's: volume, velocity, variety, right? Right. A company has taken a decision to switch from using long-term fixed rate finance to fund its working capital to mainly short-term variable rate finance. The most possible outcome of this change would be, what is the reason? Right. They might have changed fixed rate finance to fund again to mainly short-term variable rate finance, kind of a over trading situation, and there might be financial problem might have there, and that's why they might move to short-term financing due to increased risk of refinancing, not any other thing. You may fail to refinance your working capital. That's why you have moved to variable rate finance. Right. Ninth question. Consider the following guidelines, three guidelines given. Which of the above are true guidelines in selecting appropriate budgetary system, right? Fixed budget, flex budget, activity-based budget, zero-based budget. Then you might have learned about beyond budgeting concept. Then when you are selecting a budgetary system, what are the guidelines? True guidelines. Incremental budgeting may be appropriate for routine activities, where zero-based budgeting approach would be more appropriate for new business unit. Yes, if you are doing a routine activity, there's no change, then you can do the incremental budgeting. You can add percentage up and down to the existing figures. All right. But when you start a new business, it is critical to identify most important expenses into the budget. Therefore, zero-based budgeting is required when such kind of situation. Therefore, number one is correct. Number two, if the management of a company needs to closely control fixed cost, active-based budgeting would be more applied. Yes, if you control the activities, your cost will be curtailed because you will learn about activity-based costing and activity-based management. Activity-based costing gives the details about the activities which generate cost and their volume and their utilization. Then ABM will analyze those activities and remove non-value-adding activities. Then you can control the cost. Therefore, that is also correct. Third one, a participative approach would be suitable if the relevant managers are well trained in budgeting and costs are controllable. If the costs are uncontrollable, it is useless to ask them to participate and do. You can't do nothing. You can't do anything, right? Therefore, but managers are well trained, then it is easy to do the participative budgeting. If the managers are not trained how to do the budgeting, then you can't apply. Therefore, number three also correct. Therefore, correct answer all of 1, 2, and 3. Answer 1.8, it is increased risk of refinancing. Last question. This is related to capacity planning. Establishment of current capacity levels of an organization is a main activity in the capacity planning exercise. Right. A manufacturing company which has achieved a production level of 68,000, the actual production level of its output, has recorded an adverse fixed production overhead volume variance for the last month. That means budget capacity එකට වඩා actual අඩු වුණාම තමයි volume variance එකක් එන්නේ. Right. Guys, I now since I have already discussed 9 questions, I can't go and see what is the answer for one 2, and 3, but I will share the answer with you guys. Therefore, don't worry. Which of the following could be true with regard to the various capacity levels of the organization for the last month? Design capacity, budgeted capacity, and effective capacity. What does the design capacity mean? Design capacity is the theoretical maximum capacity. Assume in a lecture hall, you can accommodate 200 students, that is the theoretical capacity, that is maximum. Then you will budget out of 200, you will budget in a classroom, 75% will occupy. Then that is the budgeted capacity. That means 75% means 150 students, right? You will expect, sorry, not budget, effective capacity. Even though 200 students can be accommodated, due to the restrictions and some areas you need to be vacated for tables and desk of the lecture, you can accommodate effectively, you can accommodate 75%, right? But based on the experience, they have budgeted to establish 70% of budget capacity. Therefore, initially, theoretical capacity is based on the rows. You can have 200 students, but effective capacity is 150. Out of that, now you budgeting 70%, that means 140. Actual might be higher all over than that. Therefore, in this scenario, 68,000 the actual capacity. Now, first one, A, design capacity 80,000. Okay. Budget capacity 70,000 can be, it might be lower than the design capacity. Effective capacity 68,000, it cannot be. Effective capacity should be greater than or equal to budgeted capacity, and it should be less than to design capacity. Therefore, this cannot be. Effective capacity should be less than, greater than or equal to budgeted capacity, right? B, design capacity 75,000, budgeted capacity 70,000. Effective capacity cannot exceed design capacity. Therefore, 80,000 is wrong. Design capacity 80,000, budgeted capacity 65,000. Okay. Effective capacity 75,000, right? Effective capacity 75,000. But in the current scenario, you can't say budgeted capacity 65,000 kilo. You can't say. Why? Because your volume variance adverse kila kiyani, you have budgeted more than 68,000. Therefore, your capacity cannot be 65,000. Because volume variance එක adverse කියලා කියන්නේ you will compare actual capacity minus budgeted capacity. If it is variance negative mean actual capacity is lower than budgeted capacity. Therefore, budgeted capacity cannot be lower than effective capacity, right? In this scenario. D, design capacity 80,000, budget 70,000, effective capacity also 70,000, actual capacity can be 68,000. Right. Therefore, this can be your correct answer. This is the correct answer. Right. Design capacity, the full capacity. Yes, design capacity we call theoretical maximum capacity. As an example, now assume if you are working in an office for 8 hours, then if you work for a week, it should be 40 hours. But effectively you won't there might be some idle time, you have to consider that. Then effective capacity out of 40 hours will be 85%, right? Or 80 can 32 hours effective capacity. Therefore, design capacity theoretical capacity, right? You will not consider any lapses due to normal lapses will not be considered. That is kind of an ideal standard, right? Okay, that is question. First section we have covered within a half hour, and then we will see question number 2. This is for throughput accounting. Okay, throughput accounting. Then here it says Smart Tech Private Limited STL produces three product types of electric components X, Y, and Z, for which three different processes are available. The following information has been estimated for the upcoming production cycle for the three products. Look at selling price given, material cost given, labor cost per unit also given. Process time required per unit given assembly, finishing, budgeted production or demand also given. The capacity of each process will be 2,500 hours, which cannot be increased in the short term. That is the maximum capacity. The total fixed factory overhead cost is 500,000. STL has been developing an optimum production plan based on contribution per limiting factor or bottleneck resource unit. That is the marginal costing approach. The new senior business accountant has suggested applying throughput accounting principle to develop the optimum production plan for the next production cycle. He has proposed to product ranking to be done based on the throughput accounting ratio TAR. It was noted that the labor is fixed nature since company pays fixed monthly salaries. Right, okay. Prepare notes to the management committee on the following. Explanation as to how the concept of contribution in marginal costing differs from that in throughput accounting. How it differs, Lama, in marginal costing, what we'll do, selling price minus variable cost, right? Selling price minus variable cost, then you will calculate the contribution. But at throughput accounting, we assume the only variable cost is what? The only variable cost is direct material cost only. All other costs will be considered as fixed. All other costs will be considered as fixed, right? Therefore, that is the main difference. The contribution under throughput accounting is higher than contribution under marginal costing. The reason is in marginal costing, you will take deduct all the variable cost, but throughput accounting only consider direct material cost only. Number two, the optimum production plan per limiting factor approach using the marginal costing approach. What you have to do, selling price minus you have deduct these variable costs, then calculate the contribution. Out of these assembly and finishing hours, you have to determine what is the bottleneck resource. Bottleneck resource එක determine කරන්න ඕනේ. Then what you have to do, assembly time you have to multiply it by the output and then get the what is the total requirement. Finishing also calculate the total requirement, then compare with the available time. Okay, I will share the screen for the answer. Question number 2. Hope you can see, right? Look at this one. Bottleneck identification of bottleneck resource. I have given time in minutes. X demand is 3000. It required how many minutes? 24 minutes, right? And finishing required 25 minutes, right? Then Y 5000 units, it require 8 minutes, and this one required 12 minutes. It said demand is 4000. Each assembly it required 4 minutes and it required 8 minutes. Therefore, total requirement in minutes given here. Total requirement 128,000 for assembly, 167,000 for finishing. But here it's only available 150,000. Labor cost is a fixed cost. But marginal costing, we have to take variable cost now. Now, therefore, this is the bottleneck resource. This is the bottleneck resource. Finishing is the bottleneck resource. Therefore, you have to calculate product mix based on the marginal costing approach. This is marginal costing approach. Selling price minus variable cost direct material, direct labor. Then you calculated the contribution per unit. Then limiting factor. ඒ කියන්නේ අපිට limit වෙලා තියෙන්නේ finishing time එක නම් මේ තියෙන limited time එක. Then you will calculate contribution per minute. Out of that, highest given by Z, second highest Y, X is the last. Then you will prepare the production plan. You have maximum 150 minutes, right? 150 minutes. First production is Z. The rank is given Z. Each required 8 minutes. Demand is 4,000. Therefore, 8 into 4,000, 4,000 into 8, 32,000 will be deducted. Second production, out of balance 118,000. Product Y, 5,000 units will be produced, each required 12 minutes, then 60,000 you will deduct. Balance one, right? Balance one, X. Available 58,000, but entire thing you required 75, but only 58,000 available. Then 58,000 divided by 25, you will get 2,320. Therefore, output will be X 2,320, Y 5,000, Z 4,000. You will calculate contribution per unit already there. You have calculated contribution per unit and then calculate the total contribution. Then fixed cost of 500,000. Then you can get the total profitability. This is based on the current situation. This is based on the current situation. Right. That is all about marginal costing approach. But throughput accounting, you will only deduct this direct material cost only. You can see the next one. Throughput accounting approach, what I have done, selling price minus direct material cost only. Then you will get the throughput contribution per unit. Even variable production cost also given. You have to assume except material, except direct material, all other costs to be considered as fixed. Right? That is assumption. In throughput, I think guys, you have already learned these things, right? Because now, because in the throughput accounting, it's a basic. The only variable cost is direct material. That is the major assumption, right? Then you will calculate throughput contribution per unit. I have taken the same product. We can say X, Y, Z. Okay, you take copy and paste it here. X, Y, Z. Then selling price minus direct material. This is the throughput contribution per unit. Then you will calculate contribution per limiting factor, contribution per uh, bottleneck resource. Per 1 minute I have calculated, even you can calculate contribution per hour. Return per hour I have calculated, you can see multiplied by, then you can see the ranking. Here it gives the 1,400 per hour, here 1,142 rupees and 40 cents per hour, here 1,050. Factory cost. Factory cost. What is the factory cost then? Factory cost per hour. You have to work out what is the factory cost per hour. Factory cost per hour. You can say, okay, I have calculated separately all other cost except direct material. Now here we have the variable manufacturing costs, right? Labor and overhead. Then you have to calculate what is the total labor cost, labor and overhead cost. This were to be considered as a fixed production cost. What you will do? This 120 is a fixed production, kind of a fixed production overhead per unit. Then you have to multiply it by the budgeted output to get the total cost. I have taken like it here. Product X 120 into 3,000 budgeted output. Product Y 100 rupee per unit. That is already there in above fixed production variable labor and overhead into output. Is it 18 rupee into 4,000? Then it is 932. Fixed production overhead anyway fixed. All together, we call them a total factory cost. 1,432,000. This is the amount you will incur for the given number of hours. What is the bottleneck resource? 2,500 hours of operating time will be there. In that 2,500 hours, the operating cost, fixed cost will be 1,432,000. Therefore, you can calculate uh, factory cost per hour. I will divide this 1,432 by 2,500. Then you can get the total factory cost per hour. Then you can calculate throughput accounting ratio. How to calculate return per hour divided by factory cost per hour or bottleneck cost per bottleneck hour. Then out of that, you can see this has the highest ranking for Y. Same as earlier. Therefore, if it is greater than 1, definitely you have to go ahead with it and you have ranked based on the highest TAR ratio. That is the answer for question number 2, guys. I am not getting the question. Is TP and return same? Yes, not same. It will differ because these costs will be considered as fixed cost, right? You can see the net profitability 1,658,000 here because it is you consider variable cost as variable because labor and overhead variable, but it is fixed. If you deduct this fixed cost from the contribution, right, then the answer will be different, right? Right. Okay, then we can move to question number 3. Question number 3. There's a question. Provide the production plan apart from showing the calculation. Should we rewrite it to separate it too? No, if they ask to provide the production plan, you have to provide the production plan. That's enough. That's all. Right. Question number 3. It related to the life cycle costing. Life cycle costing will be applicable for a product which is operated in a highly competitive environment or product which has a shorter life cycle, like assume mobile phone. It has a shorter life cycle because when it comes to the market, immediately it has a high demand, then it automatically, when new model comes, that become obsolete or out of date, right? Therefore, the life cycle costing applies for that on that kind of product range because product has a shorter lifetime. They will apply life cycle costing, right? Okay, I'll move to the illustration. Industrial Electronic Limited ICL is planning to develop a new television. They are going to manufacture television that will have a lifetime of 3 years. The development of process would take 1 year with the sales commence at the beginning of the second year. Second year is the begin currently. The industry has highly competitive and do not expect sales to the product beyond 3 years from the start of the sales. The production following information is relevant to the new product. This new information given year-wise. Therefore, when you are going to take the life cycle cost per unit, you have to consider the cost incurred from R&D, research and development, that is the initial phase, right? Design and development phase to decline phase, total cost incurred over the life cycle to be divided by the total output over the life cycle, right? As you are the senior accountant of the company, you are reviewed the above estimate prepared by your assistant accountant. It was noted that the learning effect had not been considered when estimate the direct labor cost. The learning effect එක මතකද ඔයා calculate කරනවා yx equal ax power b, right? You might have learned, right? I think you have learned, you have an idea because now we are preparing for the examination. I'm not make you guys afraid, but you have to learn those things at the moment. The 80% learning effect should have been estimated for first 3000 unit, and it was considered 4 hours as the labor requirement per unit, which is the time required for the first unit. Can you remember those days we have learned the formula yx equal ax ax power b power b yx equal ax power b. The b is, what is the value of b? B equal log learning rate. That is, here it is 80% divided by log 2. Then you will calculate the b. X is the number of units we are going to manufacture. A is the time taken by first output. The yx means average time if you manufacture x number of output. Hope that is clear, right? You have already aware about these concepts. As a senior accountant, you must evaluate the financial feasibility of the above proposal, considering yx y කියලා දාගත්ත ප්‍රශ්නයක් ලෑනවා yx කිව්වේ මම y 10,000 y 5,000 y 3,000. That is the average cost of 3,000. Our average hours of 3,000, average hours of 5,000. Likewise, the competitor may offer identical product. LCL offers at a price equivalent to 30,000. Competitor's price is 30,000. Explain the suitability of applying life cycle costing. Then you have to explain. Then you have to say why this is important. Identify the keywords. Explain. You're going to tell about why this is important. This company is operating in highly competitive market. Highly competitive. Alternatives and competitors are available, and the product life cycle is shorter. Therefore, in such situation, it is better to evaluate the product profitability by using life cycle costing technique. Right. Then part B asks to calculate the life cycle cost per unit considering the learning curve effect, and explain how it would be beneficial to the company when competing with current competitors' price. The customers in the market segment is highly price sensitive. Then you can't charge a premium price also. You can get more customers if you offer lower price. Right. Yeah, I will share the answer script with CA, then they will share the answer script with you. Right, I will go to the answer or calculation, or I have already calculated the answer. Now you can see without learning effect, you have to calculate, because currently you have calculated without considering the learning effect, right? Then if you work out, you can see product development cost anyway you have to take, direct material cost, you have to take the total, right? Total direct material cost given. Okay, I will hide this information. Right, these are the cost information. Then I have taken all the direct material cost. Within direct material cost, you got the total of the life cycle. Then I will take direct labor. I have do a working direct labor. What is the value of direct labor cost? Now here you have to apply learning curve effect. You can see. මෙතන බලාගන්න ළමයි, මෙතන in the illustration it says after 3,000 units learning will cease. Therefore, learning rate apply up to 3,000 units. Thereafter, any output you produce beyond 3,000, you will get what? The time taken by 3,000th unit will be applicable for remaining output. Therefore, you have to calculate total time required for 3,000 unit and time taken by 3,000th unit. ඒක කොහොමද කරන්නේ? First you will find out total time required for 3000 unit and then deduct total time taken by 2999 units. The difference between the total time, you can find the time taken by 3000 unit. Okay, first we will find out total time required for first 3000 unit. Yx equal ax power b, again y 3000, a is 4, x is 3000, b is ax power b, log zero point 0.8, that is learning rate, divided by log 2. Then you will receive an answer 4 into 3000 power minus 0.31 to 3219. The answer will be y 3000.3 hours. That is not the total time. That is the average time if you manufacture 3000 units, right? Average time if you manufacture 3000. In order to find out the total time, you have to multiply it by 3000. Give me right. Now we can see in this situation, yx equal x power b, you will calculate the total time required for 3000 unit as 9117 hours. 911.7 hours. Now what you can do? Now you have to find out total time required for 2999. 299කට යන time එක කීයද කියලා ඔයා බලන්න ඕනේ. The total time required for 2999 units are 911.4. Right. Then if you compare the total 3000 unit taken 0.3 hours 0.3 hours. එහෙනම් මම දැන් calculate කරනවා total time එක කොච්චරක් ඕන වේද? Year 2 එකේ බලන්න. Go to year 2. They manufacture 3000 unit. එහෙනම් up to 3000 unit learning will apply. Therefore y 3000 calculate කරලා total time එක හොයාගත්තා නම් මෙන්න මේ time එක use කරන්න පුළුවන්. 911.7 you can use. Yes, 911.7. Any output beyond 3000. Year 3 you will manufacture 7000. එහෙනම් ඒ 7000 වලට එන්නේ කොහොමද? 0.3 hours. හරිද? 0.3 hours into 7000. It is 2100 hours. Then next one 0.3 into මෙතන කීයද තියෙන output එක 2500. Then it is 750. මෙන්න labor requirement එක ගත්ත total hours ගානේ. ඊට පස්සේ here they have mentioned the current labor rate is 1000. That means 12 million is the total cost. They have estimated 12 million rupees. That means 4 hours into 1000 rupee each, and then per unit cost you can say 1000. Then expected labor rate 20% increase in second year, further 20% increase, and again 20% increase annually. This is the expected labor rate. This is the expected labor hours based on learning curve effect. What now you can do? Calculate the total labor cost. This is the total labor cost. That's why I have taken the total labor cost here 5.41. Initially it was 50 million. Fixed production overhead, it won't change. Sales commission same as it is. And then you can get scrap sales. They have mentioned scrap sales how much? The scrap sales are 6.164. It has been given 6.16. It has been given already. Then you can take the total life cycle cost. Total life cycle cost in rupees million. Then total life cycle output. This is the total life cycle output 12,500 units. Then if you divide total life cycle cost by total life cycle output, this is the total cost per unit. 23,000 if we have not considered the learning curve effect. 20,300 is the cost as per learning curve effect. Right. Then without learning curve consideration, These are the selling price 33, 31, and 28. Definitely, if you charge a higher price, customer will reject your product because competitor offers at 30,000. If competitor offers at 30,000, if you offer in 33,000 different, definitely price sensitive customers will go and purchase from competitor rather from you. But if you consider learning curve effect and calculate the accurate cost, if you charge the profit markup, right? If you charge the profit markup 40% or 30% and thereafter 20%, still your price is less than 30,000, you can capture the market. Therefore, the product cost will be more accurate if you consider the learning curve effect. Therefore, you will recommend the price will be more competitive if with the accurate calculation of unit cost based on learning curve theory. That you can recommend the price is competitive and the revised price should be adapted. That you can see. Right, guys, hope you can understand. If you have any question, you can drop, you can put in the message or මොන හරි තියෙනවා නම් message වල දාන්න. හැබැයි හොඳට focus කරලා අහගන්න. You have to focus the content and listen properly. Because guys, you are preparing for the final examination, you have to concentrate properly and you can think, okay, if you are sharing the answer, I can watch it later. But don't in this new year, don't postpone work. If there's a task to be completed, do it and finish, right? That is very important to all of your uh, what is the difference between marginal costing and you can't compare like that, Putta, because marginal costing is totally different from the life cycle costing. Marginal costing will deduct selling price minus variable cost. Life cycle costing means all the cost you will consider when calculating cost of unit. Marginal costing value is the inventory or cost of unit based on marginal cost only. Fixed cost will charge to P&L and it won't be part of unit cost. That is the main comparison, right? Right. I will move to the next illustration. Now, if you have written the examination, now you should have an idea how, and you can mark your answers and see how much you have got. දැන් ළමයි බලන්න you can send me you can put your marks those who have got 10 out of 10 in MCQs to satisfy. How many of you have got 10 out of 10? Put into the chat. How many of you have taken 10 out of 10? Anyone? What? No one. Oh my God. 6, 8, 7, 6. It's very dangerous, Putta, if it is 6. Right. 2. My God. Putta, that one you have to specifically you have to put your time. And 9. Great. Cannot remember. Right. Anyway, you can check your answer because it is very important. If you focus, really focus and done it properly, you can do this exam. Because MCQ also, if you properly manage, you can save time and you can get a very fast marks. Right. Be prepared. Right. Question number is 7. Okay. Question number 4. Look at question number 4. Saga Constructions Private Limited (SCL) is a leading construction company which operated in Western, which average turnover stand 200 million a month. Variable cost is 55%. Okay, variable 55%. Average monthly turnover 200 million. Monthly fixed cost rupees 10 million. Okay, and which includes the salaries and overhead. SCL has entered into an agreement with the consultant to restructure the operation, which will directly impact on the revenue stream and on the variable cost. The consultant submitted a proposal to restructure the operation. Expected outcome as below with the respective probabilities. Look at there are 3 scenarios given. Best case, base case, worst case. Impact to the monthly revenue. In the best case, revenue will increase by 80%, probability of 30%. Yeah, in learning curve theory, Puta, take it to the nearest up to 2 decimal places. Otherwise, you won't get a proper answer. Nearest to 2 decimal places. Right. Then base case increase 40% and probability 50%. Worst case reduced by 20%, probability 20%. Variable cost also, best case scenario reduced to 40%. Base case same level at 55%, and worst case scenario increased to 65%. Now there are 9 outcomes, right? Revenue 3 scenario, variable cost 3 scenario. 3 into 3, 9 scenarios will be there. As an example, in a best case scenario, variable cost can be 40. Variable cost can be same level. Variable cost can be 65%, right? Likewise, we have to work out. As per the consultancy agreement, SCL agreed to share 20% of the profit earned above the current level after charging the consultancy fee payable amounting to rupees 2 million a month. In addition, the restructuring will result in a fixed cost saving of 3 million. Okay. If monthly profit after the restructuring do not exceed the present profitability level, consultant agreed to reduce his fees by 1 million a month. Okay. Expected profit අඩු නම් එයාගේ profit එක අඩු කරනවා 1 million වලින් අඩු කරනවා. Calculate the current profitability of the company before considering the proposal of restructuring. අපි බලමු current profitability කොහොමද කියලා. 200 million variable cost 55 කියලා කියන්නේ 110, then your contribution will be 45%. 200 into 45, it should be 90 million. Deduct fixed cost 10 million. Current monthly profit is 80 million. Very straightforward, 80 million. The next one, expected profit of SCL after implementing the restructuring proposal. We will move to the calculation. Question number 4. Right. There will be 9 scenarios. I have broken down. First scenario, I'll see this one. First scenario, what is the first scenario? Revenue best case, variable cost 40%. Best case scenario, මොකද best case scenario එකද කියන්නේ? Revenue will increase by 80%. Therefore, 200 million revenue will increase by 80%, mean 360. Variable cost will be 40%. Contribution 216. Net profit before profit share. Yes, it is actually payoff. You can prepare a payoff table. I have prepared in this kind of a table. You can prepare a payoff table and put these figures into the payoff table and identify the expected profit. For your understanding, I have prepared this. Therefore, contribution 216. Then you have to deduct, right? In this scenario, your fixed cost will reduce. Currently, fixed cost 10 million. It will reduce by 3 million. එතකොට අපිට deduct කරනවා 7 million. And you will charge, consultant will charge 2 million consultancy fee. Then 207 million will be there. Profit share, if profit share is greater than 80 million, they will get 20% over the excess. ඒ කියන්නේ මේකෙන් අපි ගත්තොත් they will share the 20% of the net profit of this one. ඒ කියන්නේ මම මෙතනින් ගත්තොත් මෙතන figure එක හරියටම අරන් බැලුවොත් making then 80 million වලට වඩා වැඩි. Therefore 20% of it should be 41.4. Right. I have deducted. Here also greater than 80. Here also greater than 80. Here greater than 80. But here it is 72. Contribution 72. Right. Less than 90. Then what will happen? Here I have to forget consultancy fee, not 2. It will be 1 million. It will be 1 million. ඒ කියන්නේ ඔයගේ contribution current level එකේ තියෙන්නේ 90. හරිද? If your contribution fall below 90, below 90, then they agreed to return not 2 million, they will charge only 1 million. Yeah. You can use either payoff if you can, because then you have to show the calculation, or you can show, there's no issue with that. Then you can calculate the profit share, then calculate the net profit. Profit before net profit share, then you will deduct profit share, then net profit. But Lamai, now you have to consider joint probability. Why? Best case scenario revenue, best case scenario, you have a probability of how much? I will show you in the high table hidden here. I will unhide. Now you can see best case scenario probability will be 30%, and variable cost reduced by 40%. The probability is 20%. And may probability I multiply window, right? You can see the joint probability 30% into 20%. Next one, best case, but variable cost same level as 55%, then 40%. The next one, you can see best case scenario, variable cost increase to 65%. The probability is 40%. Likewise, you have to calculate the joint probability. You can see I have calculated the joint probability. Then if you take the total, it will be tallied to 1. This is then I will multiply the net profit by the joint probability, then you can get the expected profit. You will end up with expected profit of 93.28. Right, 93.28. Then it will ask the number 2, they ask about what is the probability that this arrangement will give you the additional commission or profit share. If you look at about this scenario, up to this point, they will get the profit share. Then these probabilities need to be added. May probabilities it is 84%. There's a 84% chance that due to the structure in arrangement, the company has to pay profit share, right? Then profit share percentage calculate කරන්න කියලා තියෙනවා. Then profit share amount will be 41.4 into 6%. Therefore, you have to multiply by the joint probabilities. Then it will be expected value will be 21.08 million. ඒතකොට මේක තියෙනවා probability එක multiply කරන්න ඕනේ. මොකද මේ ටික එකතු වුණාම 185 කියලා කියන්න බෑ, because total also 93.28. You can't give like that. Therefore, this profit share should be multiplied by the joint probability. Then it will be 21.08. You can see I have multiplied profit share into the joint probability. Right. That is question number 4. It is discussed under risk and uncertainty section. Risk and uncertainty section. Question number 4. How did we calculate joint probability? ළමයි joint probability calculate කරන්නේ මෙහෙමයි. Then best case scenario බලන්න, best case scenario එකේ variable cost එක 40% it can be reduced, right? In a best case scenario, variable cost can be same level. In a best case scenario, variable cost can be 65%. Therefore, if I want to calculate joint probability of changing revenue, this 30% will be multiplied by the probability of having variable cost 40%. Then again 30% will be multiplied to 40%, because if your variable cost remain in the same level, again 30% of probability will be multiplied to 40% if your revenue variable cost increase to 65%. Right? ඔක decision tree එකක් විදිහට ඇඳ ගන්නත් පුළුවන් ළම. හැබැයි මම මේක table එකක් විදිහට දාගත්ත pay off එකක් විදිහට දාගන්න එක lazy. Table එකක් විදිහට. Hope that is clear. Right? Interesting. Yeah, if you have any question, let me know. Someone has raised a question. If you have any question, you can raise me, because actually within the limited time, I am trying to complete as much as possible. People who is willing to get, you can understand. If you can't understand, let me know. I will explain as much as possible I can. What you need to do, you need to practice these questions. Otherwise, it is very difficult to pass the exam if you are not preparing. So may I know how to share answer sheet and recording by email or any other way? At the end of the session, I will share it in the group itself, and I will ask institute to share it. Right. Okay, guys, we will move to question number 5. This is working capital illustration. We have to work out this illustration. Kurunagala Coconut Product Limited, KCP, is the leading manufacturer for coconut-based products. It makes annual credit sales of 600 million with 40% contribution. 75% of the credit sales are made to wholesale customers, and 2-month credit period is offered to all customers. Bad debts 2% of annual credit sales, and 2 proposals being given. Proposal 1, extension of credit to wholesale customers. The credit period will be 3 months. However, an early settlement discount of 1% will be offered for the settlement within 1 month. Early settlement discount. And then if you settle within 1 month, and is expect 25% of customers will make use of this opportunity. Others will take long credit period. The bad debt ratio will increase to 4% of its credit sales. The company expects this proposal will increase credit sales to wholesalers by 40%. දැන්ට තියෙන sale ප්‍රමාණයෙන් 40% වැඩි වෙයි. Proposal 2, factoring of receivables. Credit administration of retail customers will be delegated to factoring company. The annual fee charged by the factor would be 4% of the credit sales. Okay. KCP incurs an annual cost of rupees 250,000 for credit administration of individual customers. Now it will be a saving. The factor would advance 80% of the invoice value and interest rate of 12% per annum. The company's desired rate of return is 10%. Now we will see how are we going to deal with this situation. Assess the financial feasibility. We have to evaluate the financial feasibility. Why? This is a working capital question, extended of credit period and reduction both given. It is a very definitely in your exam paper, question number 5 will be working capital management and 10 marks. Definitely it will be allocated. When you're going to the examination, definitely you have to prepare for question number 5 because it is working capital management. තමයි ඒක නැතුව යන්න එපා. ඒක ජනෙම හැමදේම බලාගෙන යන්න ඕනේ. It is very important, this working capital illustration. Okay, I will show you how to manage this kind of illustration. Right. Right, hope you can see my screen. Okay, this current scenario is like this: credit sales 600 million, wholesale 75%, that is 75% of 600 can is 450 million, retail 25%, that is 150 million. Debtors period 2 months, debtor balance should be, කොහොමද අපි work out කරන්නේ? This 600 million credit period, both we have given 2 month credit period. Credit period මාස දෙකක් දීලා තියෙනවා. Right? Therefore 600 million for 12 months. Right? I will work out debtor balance. You have sold on credit 600 million. This is for 12 months. At any given time, 2 month sales will be there as an outstanding. That means your debtor balance will be 100 million. Right. Proposal 1. What is the proposal 1? The credit period will increase to 3 months. 25% will settle within 1 month and 75% will take 3 months credit period. Okay. First, I need to work out proposal 1 එකට එන්න කලින් I need to work out what is the current debtor balance for wholesale debtors. අනිවාර්යෙන් මේකෙන් 75% වෙන්න ඕනේ. Okay, current debtors wholesale. You have made sale of 450 million for 12 months for four wholesalers and given 2 months credit period. It is 75 million, right? Now you are going to give 3 months credit period and customers who settle within 1 month, you will give 1% early settlement discount, right? Credit sales වලට මොකද වෙන්නේ? Credit sales currently 450 million plus additional 40%. Sales will increase by 40%. Therefore, I will work out the credit sales 450 million into 1.4. Your credit sales will be 630 million. Credit sales 630 million. Out of the 630 million, you have to work out new debtor balance. Debtors new 25% within 1 month. Within 1 month, 25% within 1 month. Therefore, I will take out of the 630, 25% will settle within 1 month. Divide by 12 multiplied by 1. This is for 1 year sale and 1 month will be taken. Therefore, 13.125 million. 75% within 3 months. Therefore, out of the 630, lamai, 75% of customers will settle after 3 months. Therefore, divide by 12 multiplied by 3. Right. 118. Therefore, you can take the new debtor balance. 131 million. Debtor balance new. Bad debt will go up to 4%. Earlier bad debt 2%. Now it is bad debts. Bad debts කීයද ළමයි 630 million into 4%. 630 into 4%. 25.2 million. Right. Now we will look at what are the cost and benefits of this proposal. මේ proposal එකේ cost benefit ටික අපි evaluate කරගමු. Benefits. Now your contribution you have received additional sales of 40%. Therefore, additional contribution from additional sales. Contribution from additional sales. කොච්චරක්ද? 630. Earlier it was 450. Right. You can say 630 minus 450. It should be 180 million. Okay. 630 minus 450. Then multiplied by 40% contribution. 72 million. Right. 72 million. Now take the cost. First, we'll take increased bad debt. Increased bad debts. Previous bad debt කීයද කියලා බලන්න ළමයි. Bad debt එන්නේ 2% නේ. Bad debts 2%. Make 75 million. Sorry. Previous sales 450 into 2%. It was 9 million. Now it is 25.2 million. Therefore, 25.2 minus 9. 25 point minus 9. 16.2. Then what else? your debtor balance increased from 75 to 131.25. That means it increase your debtor balance. That means your debt finance cost on debtor balance will go up, right? Finance cost on debtor balance. Therefore, I have to calculate what is the increased finance cost on debtors. Increased finance cost on debtors. Debtor balance earlier how much? 75. Now it is 131.25 minus 75. Your cost of capital, the company's desired rate of return is 10%. 10% return බලාපොරොත්තු වෙනවා. Now I will calculate the amount 131.25 minus 75. That is increase amount of debtors into 10%. 5.65. In addition to that, you have to take early settlement discount. Early settlement discount. The customers who settle within 1 month, out that means 630 into 25% into 1% should be given as a discount. We will work out 630 out of that 25% will be settled in advance. 1% discount will be offered. It is 1.575. That's all. Now you will take net benefit. Net benefit. 72 minus cost. These cost. You will end up 48.6 million. 48.6 million. Then what is your opinion? This is the proposal is financially acceptable. The proposal is financially acceptable. The proposal is financially acceptable. You can say like that, guys, because you can see how we have built up the answer. අපි scenario එක build up කරගෙන කොහොමද අපි answer එක develop කරගත්තේ. It is very important if you have to properly analyze and build up the answer. Then you can easily write the exam. I think hope you have understood, right? It is very important to understand the concept and practice. Hope you guys, right? We will move to the proposal 2, that is factoring of receivable. Okay, factoring of receivable. I will take a screenshot of it. Give me a second. Give me a second. Right. Now we will read the illustration part B, proposal 2. Proposal 2, you are going to do the factoring of receivable. Therefore, first in the credit factoring of receivables, factoring comes the annual fee charged by the factory 4% of its credit sales. There's no change in credit period. 2 months will be there, but they have allowed to collect the cash from debtors, and they will charge 4% of the credit sales. KCP incurs annual cost of 250,000 if they collect their own. The factor would advance 80% of the invoice value at an interest rate of 12% per annum. The company's desired rate of return is 10%. Right, okay. Now first we'll take the current credit sales to these retail customers. We have already calculated 25%, 150 million. 150 million. Therefore, debtor balance will be 150 million for 12 months. You are giving 2 month credit period. 2 months credit period. Will work out 150 divided by 12 multiplied by 2. Debtor balance will be 25 million. Will be 25 million. Right. Okay. Give me a second. 25 million. Right. Debtor balance 25 million. Now you are going to do the factoring. Abhi balam factoring. What is the total cost of factoring? Therefore, cost anyway based on the given scenario. Factoring fee. They will charge 4% of the total credit sales. Total credit sales 150 million out of, sorry, is it? Yes, 150 million. They will charge 4%. That means 6 million they will charge. 6 million rupees million. Then 250,000 administration cost of unit that you can saving on factoring admin. Own collection करो तो कोचरक save වෙනවද 250 minus 0.25 minus 0.25. Then factor will grant an advance of 80%, right? Factor in debtors. If you have properly done this working capital management, this factoring could have been understood in right. Okay. In debtor balance. Now factoring company only give 80%. Like Lama, this factoring arrangement mean a kind of a tripartite arrangement. Company will sell the goods to customer, but you want money, but customer you have sell on credit. But you can't wait, let's assume it's a 2-month period, you can't wait till once customer settle to you. What you will do? You will sell the invoice, transfer the invoice to factoring company, collect an advance. Customer will directly settle the factoring company. Factoring company deduct the advance and the fees. Balance will be transferred back to the company after 2 months time. Right. That is the arrangement. Right. We will see debtor balance. Out of the debtor balance, 80% of the invoice value at a rate of 12%. Therefore, factoring company, factoring debtors, they will 80%, 150 million into 80% will give as an advance. This is for entire year, divide by 12, right? Then they will charge interest on the debtor balance, right? Divide 12 and you have to multiply it because you will risk, they will collect the cash by 2 months time multiplied by 2 and finally you have to charge it. What is the rate? 12%. Right. Therefore, you have to take the factor in debtor. First calculate the factor in debtors. We will charge interest thereafter. Factor in debtors. Debtor balance is 150 million. Out of that, they will give 80% advance. That means 120 million for the entire year. This is for year, but each month you will collect. You will give 2 months credit. Each 2 months period, you will collect the debt dues. Then 20 million debtor balance will be there in any time as a factor in debtor balance. Then they will charge, right? They will charge 12% on it. 12%. Right? 12%. That means 2.4 million. Balance 20%. Balance. That is own financing. You have to finance your own. That means 150 million into 20%. Right? Divide by 12 multiplied by 2. Own financing. 150 million into 20% you have to finance, because factor only give 80%, balance 20% you have to finance your own. This is for 12 months into 2, then it is 5 million. Your borrowing rate, if you are going to finance, your borrowing rate is 10%. Right? There's no indication, right? There's no indication that your bad debt reduced, right? Right. You can either estimate, assume that there won't be any bad debt, or you can assume the bad there's no change with that proposal. Right. Now we will take the total cost of factoring. Total cost of factoring. If we get the summation, the total cost of factoring, cost of factoring will be 8.65 million Buddha. 8.65. Then you have to check this 8.65, the factoring. If you decide to collect your own, what would be the cost? Where with තනියම collect කරගත්තා නම් cost එක කීයක් වෙයිද? You have to work out. Right. මෙතන they have not been, අපි හිතමු due to the factoring, I will make an assumption. No change in okay. Now we have to forget to take the 2% bad debt on annual credit sales, but it has not been mentioned. Yeah, what you can do, you can either add to as a cost, or you can assume that it will be deducted. එහෙනම් ඒක saving එකක් විදිහට add කරගන්න ඕනි. I will put a note and say reduction of bad debt. Reduction of bad debt is a saving. Bad debt කීයද ළමයි එන්නේ? Out of debtor balance, bad debt will be 2%, 0.5. Admin cost saved. එහෙම calculate කරත් කමක් නැහැ. Separate cost you can. This is the incremental cost you may get on this one, right? $8.115. ඔයා own collection කරා නම් කොච්චර cost එකක් යයිද? එහෙම කරන්න පුළුවන්. Now I have, this is the net change ළමයි. අපි බලමු own collection කොච්චරක් යයිද කියලා. How much will be own collection? Own collection. Debtors will be 25 million same. There's no change with that. Finance cost on, you can say finance cost on debtors will be how much? 25 million debtor balance into 10%, right? 10%. 10%. It will be 2.5 million. Then what else? There will be bad debts. Bad debts. Bad debts. 0.5 million. Bad debts. Then take the total. This is the total cost you might have incurred if you collect on. Will be 3 million. Right. අපි මේක ඕනනම් මේ incremental basis මේක හැදුවේ. ඕන if you reduce this one 8.9, this is the if you collect your own, right? If you factor in, this is the total cost. Factoring fee 6 million, right? And factoring cost, interest, factoring interest interest charge 2.4 and altogether it will go 8.9 million. Own collection will be maximum 3 million, right? Then net payment. May විදිහට පෙන්වනවා හරියමයි. That's better. 5.9 million. Then what is your opinion? If you do the factoring, your cost will increase by 5.9 million. Therefore, this is not recommended. Not recommended. Not recommended. Why? Incremental cost is high. Therefore, you should not recommend this one because incremental cost is high. Not recommended. That is proposal 2. Right. Question number 5. We will move to question number 6, Lamai. With the limited time, we'll see we can go through question number 6. They have given the details about budget production and detail we can quickly run through. Direct material, direct labor, variable production overhead, per unit cost given, fixed production overhead given. Actual information given, actual direct labor hours work was 80,000 hours during the period. Require reconcile the budgeted profit with the actual profit, showing the variances in as much as possible in the standard marginal costing approach. Okay, we'll calculate budgeted selling price and we will calculate contribution kiyada කියලා and explain why the variances used to reconcile profit in marginal costing system are different from the used in standard absorption costing system. 4 marks. Variance that would be different, any additional variance that would require to reconciliation. The statement was prepared using standard absorption costing. Right, okay. I will take a screenshot of this one. Right, we will calculate the variances as much as possible. Right. Question number 6. These details are available. Am I right? First, we will calculate this is the selling price. These are the standard cost. Here 3,000, variable cost are 2,000. Right. The standard contribution per unit should be 1,250. Okay, first we will write it down. We will work out variances as much as possible. Then මෙතන sales 77. This is the actual sales. In details ටික තියෙනවා අපි මෙතන අරක. Right, same, right. Okay. First I will work out sales price variance. Common sales price variance වෙන්නේ actual price minus budgeted price into quantity sold. Right, short form I have used. Actual price into quantity sold mean actual sales value. It is 77 million. 77 million minus budgeted price is how much? 3,250 into actual sales quantity 22,000. Right. We make a workout කරොත් 77 minus 3,250 into 22,000. Make a million වලින් තියෙන නිසා make a million වලින් බෙදමු. Right. It is 5.5 million favorable. 5.5 million favorable. 5.5 million favorable. Right. Sales price variance 5.5 million favorable. Make rupees million වලින් තියෙන ළමයි. ඊට පස්සේ ගන්න contribution margin variance එක sales contribution margin variance sales volume margin variance. Right, we will work out it. Sales contribution margin variance එකන්නේ කොහොමද? Actual quantity sold minus budgeted quantity into standard contribution. මෙතන ළමයි standard contribution එක කීයද? මේ selling price 3250 variable cost මේ තියෙන මේ ටික එකතුව. මේ ටික එකතුව ගත්තා. If you take the total it is 2000. This is the selling price. The standard contribution should be 3250 minus 2000 it is 1250. 1250 ළමයි. එහෙනම් actual quantity sold එක ගත්තොත් actual quantity 22000. Budgeted sales quantity if you can see 20,000. It is favorable guys into 1250. Work out it is divide rupees million. We are going to show in rupees million. Therefore 2.5 million favorable. 2.5 million favorable. 2.5 million favorable. Right. That is sales volume contribution margin variance. Thereafter, we can go to the material price variance. Material price, how to work out? Standard price per unit minus actual price into quantity purchased. Right. The standard price per unit is 200. There are two types of material, the X and Y. X. The standard price is 200 per kilogram. 200 per kilogram. Actual given. Then actual price into quantity purchase mean actual cost. Right. Therefore, what we can do, the standard price into quantity purchase. The standard price into quantity purchased 60,000 kilos minus actual price into quantity purchase mean actual cost. This is 13.2 million minus 13.2 million. Right, we'll work out 200 into 60,000 divide by 1 million minus 13.2. It is negative 1.2. Right, negative 1.2 million. It is an adverse variance. It is an adverse variance. It is an adverse variance. 1.2 adverse variance. Material price for X. Then we'll look at Y, material Y price variance. The standard price is given 150 rupees per kilogram into actual quantity purchase 40,000 minus actual price into actual quantity mean actual purchase cost 6.4 million. Right. Then we will work out again equal 150 into 40,000 divide by 1 million. We have to convert into millions. Minus 6.4. It is again minus 1. Adverse variance. Then you can take the total. Take the total plus 1.6 million. It is an adverse variance. 1.6 million. It is an adverse. That is material price. And material usage. Material usage. How to work out? The standard usage of actual production minus standard usage of actual production minus actual usage into standard price. Then standard usage material X. Standard usage කීයද දීලා තියෙන ළමයි? Standard usage 3 kilogram per unit material X. Then 3 into 22,000 you have manufactured and minus actual usage given 60,000 kilograms. Then you have to multiply it by standard price. Standard price 200 into 200. Then you can get the value 3 into 22,000. 22,000 minus 60,000. Right. Difference multiplied by 200. It is favorable 1.2 million. We make a millions වලට convert කරගමු. It is 1.2 million favorable. 1.2 million favorable. Right. Then material Y, same way. Lamai 2 kilogram into 22 kilogram into 22,000 minus actual 40,000 into 150. මෙතන දාගමු එකත් 2 into 22,000 44,000 kilograms, actual utilization 40,000, that means 4,000 favorable into 150 divided by 1 million, make it 1 million value, it is 0.6 favorable. Total 1.8 million favorable. That is material usage. You can analyze this into mix and yield. The time constraint, I think I am not be able to go into in detail, but you can analyze this into mix and yield. Mix, if you can see the mix, 3 kilogram for X, 2 kilogram for Y. Mix all should be 3 each combination. If you manufacture one output, combination should be 3 to 2. Right, then we can see now usage you can analyze into mix and yield variance. Okay. Mix variance. You will compare standard mix of actual usage minus actual mix into standard price. SP. The methana ratio of methana we will take some space, or we can work out standard mix X 3 units, Y 2. Then each output, the combination should be 3 to 2. That means each should contain 5 kilograms. Now actual 60,000 here and 40,000 for altogether 100,000. Yeah, you can use the short forms. 100,000. Now actual mix you have to convert into actual into the standard mix. Now if we have used 100,000, ratio should be 3/5 and 2/5. එහෙනම් මම මෙතන ගන්නවා x වෙන්න ඕනේ out of 100,000 3/5. ඔන්න අපි කියන 5න් 3ක් 3/5 should be x. 3/5 තියෙන්නේ. material එළම mix variance එකක් එන්නේ නැහැ. Then this should be 2/5. Exactly this then balance. There is no mix variance ළමයි. Therefore, standard mix and actual mix same. Therefore, mix variance will be nil. Mix variance will be nil. Then mix and yield together equal to usage. Therefore, yield variance should be yield variance to be 1.8 then. 1.8 favorable. 1.8 favorable. What is the reason? Because mix and yield equal to the usage variance. Mix variance 0, then yield variance should be 1.8 million. Then we have look at about direct labor. Direct labor rate variance rate. We will take the standard rate minus actual rate into hours paid. අපි මෙතන standard rate එක දීලා තියෙන ළමයි කීයද 200 per hour. Therefore, this actual rate into hours paid mean actual cost. This is actual cost already given 12.6 million. Therefore, standard rate is 200 into hours paid 90,000 minus actual rate into hours paid mean actual cost. Actual cost given 12.6 million. We can work out the value. We make a value එක ගමු. It is 5.4 million favorable direct labor rate variance. Favorable. Direct labor rate variance 5.4 million favorable. Direct labor efficiency. You will look at standard hours for actual production minus actual hours worked into standard rate. The standard hours, how many standard hours to be used? Yeah, if you calculate the variance, you will get the marks. There's no issue. The standard hours for actual production, we have manufactured 22,000, each required 4 hours. Therefore, standard hours should be 4 into 22,000 minus actual hours worked. Actual hours worked, if I have not mistaken, 80,000 hours worked. Right, 80,000. 80,000. Then efficiency variance multiplied by standard rate of 200. Make them copy and paste karna, then it will be much easier. And I will divide this by 1.6 million favorable. 1.6 million favorable. Direct labor efficiency. But there's an idle time because you have paid for 90,000 hours, but work only 80,000. Therefore, idle time, always idle time. Adverse. Actual hours worked. Actual hours worked minus hours paid into standard rate. මේක ළමයි ගත්තොත් actual hours worked 80,000. Actual hours paid 90,000. The standard rate 200. I will make it millions. It is 2 million adverse. 2 million adverse. Right, idle time variance. Variable overhead cost also you can work out. Like, guys, I think we are running out of time. We will at least we will complete question number 6. Question number 7 I will share the answer. Question numbers, then we have to look at about variable production overhead, which is similar to labor expense variance. Expense, you will work out standard rate minus actual rate into actual hours worked, right? Then standard rate is given here 75 rupees per hour. 75 rupees per hour, standard rate 75 rupees. Actual hours worked 80,000. Actual hours worked into actual rate mean this one actual cost. Actual cost already given, variable of it 5 million, right? Then you will deduct 5 million here. It is 1 million. Then we will make it to millions rupees. It is 1. It is favorable. Favorable variance 1 million. Right. What work කරපු හැටි බලන්න ඕන මම මේක මේ විදිහට දාන්නම්. This is the way I have computed it. Right. Then variable production overhead. Variable production overhead efficiency similar as direct labor efficiency variance. මේ විදිහටම යන්නේ standard hours minus actual hours worked into standard rate. Same formula, but here standard rate is 75. 75. 75. Then this need to be divided by 1 million. 0.6. It's favorable. Final lamai fixed production overhead there, but in marginal costing approach, remember in marginal costing approach, we compare fixed production overhead expenditure variance only, actual versus budget. There's no volume variance, there is other way change. Right. We only compute fixed production overhead and direct mix and yield වලට දාන්න ඕනේ. මෙතන direct labor එක mix and yield වලට දාන්න විදියක් නැහැ because only one type of labor is there. It is required. Then we will take fixed production overhead. Only expense variance will be computed. Overhead expense variance only. Budget minus actual. Budget one, budgeted cost was how much? 2 million, actual 2.5 million. 2 minus 2.5. It is 0.5 million adverse. Right. 0.5 million adverse. Now we have calculated the total variances. What you need to do when we are preparing the variance reconciliation statement, you have to compare budgeted profit versus actual profit. If it is start from budgeted profit, if there's a favorable variance, you have to add it back because actual profit is higher than budgeted profit. If it is an adverse variance, what you need to do, you have deduct it from the budgeted profit. Now you are going to prepare variance reconciliation statement. Variance reconciliation statement. Variance reconciliation statement. Therefore, you will calculate first. You calculate budgeted profit. Budgeted profit. But how to calculate budgeted profit? Standard contribution. Oh, sir, we'll take budget contribution first. Budgeted contribution. Then standard contribution we have calculated 1,250. Budgeted sales to 20,000. Therefore, 1,200 250 to 20,000. Your budgeted contribution was 25 million less. Fixed production overhead budgeted. It says 2 million. 2 million. Take copy and paste. You will deduct it. 2 million. Then you can get the budgeted profit. Budgeted profit. 25 million minus 2 million, it is 23 million. Then what you will do, you will add favorable variance, deduct adverse variances. Right. line. Add favorable variances, deduct adverse variances. Now you can take above variances from the sales. If I take sales, under sales variance, right, Lamai? Under sales variance, you will include these two variants, price and volume. Sales price and volume. Now sales price variance, you can see sales price variance 5.5 million favorable. 5.5 million. 5.5 million favorable. Volume variance 2.5 million favorable. 2.5 million favorable. Then direct material. Direct material. You will take price instead of usage. अब usage එක වෙනුවට volume variance එක එන්නේ මේ expense variance එක විතරයිනේ. Because in marginal costing expense variance there's no volume variance. That is the difference between absorption approach and marginal approach. In absorption approach we will calculate fixed production overhead expense and volume variance, but marginal costing, it is a periodic expense. You will calculate the expense variance only. You have learned those things, you have already learned, right? Then price variance and direct material, instead of usage, you will take mix and yield variances. The price variance, if we go to the direct material price, it is 1.6 million adverse. 1.6 million adverse. Mix variance 0. Yield variance, as I can remember, yield variance 1.8 million favorable. 1.8 million favorable. That is direct material. Then direct labor. Direct labor. Direct labor rate, efficiency, and idle time, because there was an idle time also. Idle time. Rate variance, if you go and see direct labor rate variance, 5.4 million favorable. 5.4 million favorable. And efficiency variance 1.6 million favorable. Idle time, if you look at idle time, 2 million adverse. 2 million adverse. That is direct labor. Then we will work out variable production overhead. Variable production overhead. Same expenditure and efficiency. Expenditure variance, expense variance 1 million favorable, and efficiency variance 600,000 favorable. 600,000 favorable. Then finally, fixed production overhead expense variance. Fixed production overhead expense variance only. That is the main change in marginal costing compared to absorption costing. No fixed production overhead volume variance. Therefore, how much is it here? 50,000, 500,000, it is an adverse variance. Right, now take the total favorable and adverse variances. I will take this one. Total favorable variances here 18.4, adverse variance 4.1, net variance 14.3. Finally, you can take final profit 23 plus 14.3, 37.3 million. This is the actual profit. Actual profit. This is the actual profit. Now, this is the variance reconciliation statement prepared based on marginal costing approach. Right? How it will be differ MC approach? How it will be different from if it is applied by absorption costing? Absorption costing ගත්තා මොකද්ද මේකේ වෙනස? The වෙනස තමයි, the change is you will calculate fixed production over expense variance plus volume variance, and sales volume contribution variance will be sales margin variance. Contribution එක මෙතන අපි use කරා වෙනුවට you will use standard profit per unit. And a standard profit per unit ගන්නකොට මෙතන අඩු කරනවා, you have the fixed cost for 20,000 unit output. එහෙනම් මෙතන fixed cost එකත් අඩු වුණාට FC මෙතන fixed cost එක අපි ගත්තොත් 100 rupee per unit එනවා. එතකොට මෙතන වාගේ profit එක එන්නේ 1250 minus 100 කියන්නේ 1150. This is contribution per unit. Contribution per unit මේ කියන්නේ profit per unit. Profit per unit. Got my point? Therefore, if you calculate this this variance, sales volume contribution variance, instead of 1250, what you will use? You will use 22,000 minus 20,000 into 1,150. The answer would have been different. 22,000 minus 20,000 into 1,150. Then it should be 2.3 million, guys. 2.3 million. මෙතන 2.5 වෙනුවට මේක 2.3 වෙනවා. Then here fixed production overhead volume variance එක හදන output එක ගත්තොත් volume variance එක හදන්නේ මෙහෙමයි. Fixed production overhead volume variance. There's an additional variance will be computed. How to compute it? Actual output minus budgeted output into standard rate. මෙතන ගත්තොත් actual output එක තියෙනවා 22,000. Actual output was 22,000, guys. Budget was 20,000. The standard rate we have already calculated per unit value 100. Then it will be 200,000 favorable. 200,000 favorable. එතකොට මෙතන ඒ දෙක වෙනස්කම් දෙක වෙනවා. මෙතන මොකද වෙන්නේ? volume variance එක 2.5 වෙනුවට this will be 2.3 million. මෙතනට අලුත් variance එකක් එනවා fixed production overhead volume variance එකට අමතරව expense variance අමතරව volume variance කියලා there will be 200,000. මෙතන effective 2.5 reduced to 2.3 reduction how much? Reduced by volume variance reduced by 200,000. Here addition of 200,000. Net effect 0. That is the difference. In absorption costing, your volume variance will be 2.3 million and there will be additional variance for fixed production overhead volume variance. That is the thing you need to explain. Right. That is the end of question number 6. Then guys, I will move to the last paper, last question. Time එක නෑ ළමයි දැන් මෙතන තියෙනව ටික බලාගෙන ගියොත් මේ ටික බලන්න I think you might have read this question. They asked to work out NPV, IRR you had to calculate and the when the project has different discounted cash flows given and net present value more realistic than the discounted payback period. Explain the reason. The reason you can see here, if you take the total cash flows, this gives the highest, but if you follow the discounted payback period, this project will be selected, right? If you want to see the answer, I will quickly run through the answer, Lamai, because since we have run out of the time. Question number 7, you can see initial investment 1.6 million given here. Construction cost, you can see it has gone up 7,000 divided point. Construction cost, I have taken it here. Investment in machinery, I have taken as an outflow. Sales revenue, I have taken. And taxation, I have calculated tax will be paid in 1 year in arrears. And then I have calculated the NPV 354.4. Working ටික මෙහෙමයි ළමයි ගත්තේ. If the cash flows have multiple inflation rates, then what you need to do, you have to calculate nominal cost of capital rate. Now in this situation, if we use IRR, IRR calculate කරන්න පුළුවන්. Now it is at the rate of tax discount factor. What is the discount factor? 14.4. NPV is 358 million. Then you can take a higher discount rate. Then you can get the negative discount rate. Then you can calculate the IRR rate. And this one, when you're going to make a decision based on payback period, you project A, it will take 4 years to complete. Then project B, it will take only 2 years, right? Therefore, in payback period, here it is 4 years. Here it is 2 years. You will select project B, right, Lamai? You will select project B. But based on NPV, you can see this is misleading. That's why take the total. It gives you NPV of 50 million. Here how much? Same amount, same duration. You will end up with 15 million. If NPV gives the highest NPV value, therefore the project should be determined, because payback period will not consider the whole life of the project, but NPV will consider the whole life of the project. Therefore, this should be project A should be selected, right? Project A should be selected, right? Guys, I have taken little more time because I wanted to explain, and most of you have already dropped. But it was very fast because I need to complete the entire session. Okay, I will share the answer script. Give me a second. I will share the mock answer script. You have to do some customization. Uh, this is question part one. You can do the IRR. I will share this one. Give me a second. Give me a second. I will share the paper. Right. Then, guys, you have to properly plan your studies and do some past papers and practice for the uh, examination. That is very important. And answer, give me a second. Right. I will share the answer script in the chat. Right. I have shared the answer script in the chat. You can refer it. Yes, meeting recording will be uploaded by CS Sri Lanka. Right, finally, guys, wish you all the best and thank you because within a shorter period of time I had to discuss and wish you all the best. And you have to properly practice and do the exam, and it will be answer sheet already I have shared in the chat. I have shared the answer sheet in the chat. You can download it, and I will share it with CS Sri Lanka as well. Give me a second. Give me a second. I will share it to the everyone. It has go to the host and panelist. Give me a second. Answer script. Let me now check it to you. Now I have shared it in the group. Hope you can receive it. Yeah. Right, great. It is very fruitful session. We have very fast because now you can't go here and there. No, it is very fast. You have to properly practice. And wish you all the best and wish you a happy new year. And don't celebrate. You can celebrate once you complete the exam. Therefore, wish you all the best. And we'll see you somewhere soon. Wherever go there, you can, if you know, you can let me know. You can come and call me and come and speak to us, and wish you all the best and prepare for your exam and spend these days wisely. Thank you very much, guys. Thank you very much. Have a nice day. Have a nice year and have a great year. Thank you very much. I'll share the paper also. I will share the paper. Give me a second. I think, guys, you might have already written the paper, right? Right. See, Sri Lanka will share the paper also. Give me a second. I have it. Right. Everything shared. Now you can refer. Right. Thank you very much. Nice. Have a great day. Have a nice day. Thank you.